Premium high, discount low. We filled it in. We're going to attack this. And now we have this low over here. Okay, so we're looking for 12,950, 12,900. Something to that effect. Obviously, if things get accelerated, then that level ain't going to be much of a concern. It'll probably just go right through that like a hot knife through butter. Could. Okay? Could. I'm not saying it will, but I'm looking for this low to be a draw on liquidity now. So with these levels in mind, go back into that range. Okay? And then smaller CIBI in here. Now this is Friday's chart from last week. I want you to see the day-by-day progression, because towards the end of the video I'm going to show you a layout that I have essentially on my charts that I'm monitoring. Okay, so as I'm day trading the NASDAQ, I'm looking at the relationship of the time frames that I'm going to show you. Okay, so that's the lesson we're teaching here. But look at Friday's data right in here. Again, we're aiming for that low. Trade up into that bearish order block. We break down below that short-term low. That short-term low is going to be influential in the future. Okay, we trade up. After opening lower, we trade up into that old low. Remember, this is the chart I showed on Monday. And I said, I wish I would have had that drawn over there. I apologize. Feels like a Groundhog Day movie moment, doesn't it? Deja vu. The old low here, it's going to be significant as well. And we traded down below the low. Is it done? No. Could it snap back? Yes. Where could it snap back to? What is this? Volume imbalance. Half of this candle, mean threshold, right? So we have mean threshold of this candle, old low, volume imbalance, and the market's down here. Roll on today. It comes higher off that low and then starts its new trading day here. Opens, rallies up into that old low, works inside this candle. Mean threshold keeps it at bay, doesn't breach that, and then erodes all day long, attacking this short-term low, and then digging into, I mentioned 13,300. I like that level. 13,002 and 13,000 even. On the hourly chart, this dashed, or dotted line rather, let me go back up one more chart so we keep our bearings here. This dotted line is that old low right here. Extended it out in time on an hourly chart. See, on the 23rd, we trade up. Look at the bodies respecting it. See that? Yes, we have a little wick through it. See that? Trades up into these wicks, they're gaps. Trades up into it and then holds all of the volume inside the candle's body. Then rolls lower. The hourly chart, once it broke down, we have a gap in here. Comes up, fills it. Consequent encroachment, sells off. Trades back up into the old low and reaches down into lower end objectives and below relative equal lows. The 15-minute time frame, you can see at 8:30, that's this candle right there, this little one. Okay, that's 8:30, 8:45, 9, 9:15, 9:30. Where's it trade to? That old low. Runs right up into it, hammers it, boom. Quickly runs away. in this move in here, you have to be on the very, very small time frame to see the move that I've outlined as a setup on the YouTube model. Ultimately, it breaks lower, fails to go down to that old daily low, rallies back up, and sells off one more time, gaps up into the SIBI and back above the old low, and then breaks again. And this keeps on eroding lower. On the 1 minute chart, I'm sparing you. You can go through your 5, 4, 3, 2, and 1 chart, but the 1 minute chart is the one that has the setup, okay? So here's that 9:30, hits the old low on the daily chart, that dotted line. Then it breaks lower. What's it break? Below that swing low. So now we have a setup potentially there. We don't have it technically until this candle right here closes. We start a new candle down here. So we have time. We're watching it. They're only 1 minute candles though, so you can't spend a whole lot of time reading books and, you know, trying out new recipes or whatever you're doing when you're trading the indices. But it has to trade back to this candle's high to get an entry. The risk above this candle here or back to the old daily low, which is that dotted line here. Again, if you lost your bearings, rewind and watch the video again and keep track of why I have that line here. It trades up on this candle here. It fills you. Swing high. High, lower high to the left, lower high to the right. This swing high should not break. Gets real close to it, but does not break. Next candle, you want to see it run. Remember all the times I'm talking about what I anticipate in the marketplace when I'm typing it out in all the real-time recordings? And I'm saying, okay, I'm looking for expansion now, looking for speed and magnitude. When you see that swing high in all the context that's here, when you have a candle that fails to take out the swing high, the next candle, if it's opening weaker, like it does here from this candle's close, now we have opening here, it comes up, fills in that little separation between the close of that candle and the opening of this one, fills it, watching that real time. It happens real quick. Opens, and then you want to see it expand lower. So you're looking for what? Speed and magnitude. How much can it cover in terms of ground? So it starts to drop off precipitously. In one candle, on a 1 minute chart, it has covered 10, 20, 30, 40, almost 40, almost 50, just about 50 handles. 1 minute. That's $1,000 in 1 minute. If you're wrong, $1,000. Thank you very much. Goodbye. Thanks for playing. And you want to listen to somebody out there that's telling you, you can trade this with $2,000 per contract initial margin. Be offside and see how many times you'll regret it because you had a $10,000 account and you thought, yeah, I can trade 3 or 4 contracts. Well, technically not 3 or 4 if you had 10,000, but if you did 3, thinking, well, I got 10,000, 6,000 can cover it. Yeah. You just lost $3,000 in 1 minute. Now your $10,000 account is a $7,000 account, if you're lucky. Folks, you have to balance risk. You have to know what you're doing, and you have to respect the measure of danger that's in all of these markets right now. All of them have the potential to have a black swan event where it just completely, the bottom falls out from underneath it and then gone. Your account doesn't exist anymore. That's how fast it can happen. Now, for the folks in the email that are saying, could you please tell us how to find setups in this market right now so that way we can participate? If you can't find the setups for yourself right now in a model that you've developed with experience, then you should not be trading right now. Forex is asleep. Leave that alone. Paper trade or demo trade these indices. Use the US 500, US 100. Trade with that with your MT4 account, or use it on TradingView. Stay practicing, because this is the same stuff that works in Forex. But right now, Forex is not moving. Why? Because global trade is at a standstill. Nothing's really moving. Everything's being held hostage. But the real risk and concern is in these markets right now. That's what you paid for. You wanted to know where the moves are going to be. I'm telling you. I outlined this stuff, and I even shared it publicly. And it's unfolding beautifully. That's for the folks that don't want to trade the indices. I'm just trying to gently remind them. Pay attention. Just because you may never trade these markets, it's experience. It's the same candlestick formations and delivery that's going to happen in Forex. Same thing that would happen in a bond market. Same thing that you would expect in a stock. It's the same stuff, folks. But if you want to see movement and not be bored to death, because Forex is literally like flatlined, and I don't know when it's going to spur back to life again. I believe it will, probably with some kind of crazy move, like a swan event, like when the euro and Swissy was depegged. Maybe not that bad, but something like that could happen in this environment, folks. And that'll get all the currencies moving again. But you got to let that displacement, that shake up, that this movement of chaos and excitement and fear and greed and all these emotions, they'll trigger them by making the markets move abruptly. But I can't make it happen. I got to wait just like you do. But when it happens, we'll see it. You won't miss it. And then it creates that initial big rock falling into the still pond. Boom. What happens then? A big splash. Everybody turns their head and looks in the direction. What was that? And then across the surface, which used to be mirror-like and smooth, there'll be expanding ripples. Some larger than others. But that movement, that's going to reverberate through all the markets. You're having to wait for that. So relax. You can't speed it up. You can't make it happen. I can't make it happen. This is the part of submitting. And most people can't.